Okay, we are super excited today. I have the Mr. Chris Lopez. Chris, welcome to Raising the Flipping Bar.
Hey, Derek, glad to be here, man. Excited to be sitting in the passenger seat for a podcast interview.
Yeah, that's right. That's what I'm really excited about. I think our audience will really recognize you and resonate with you. You were the one that actually kind of got me bitten by the podcast bug. I think it was like 2022. So I'm pumped to have you back.
Good. I'm glad to hear it.
Yeah, absolutely. So let's dive in. We're in season 2, and what we're going to talk about today is you've got a lot of different balls in the air, a lot of different companies, and we were kind of talking before we kicked this episode off. I want to give, or really for you to give an intro on the 3 primary companies that you focus on, but we're going to dive a little deeper on one. But tell us a little bit about your 3 companies with Denver Investment Real Estate Podcast, Property Llama, and Envision Advisors, because I want to set the stage, but then we're going to go a little deep on one of these companies.
Of course. So let's start with the Denver Real Estate Investing Podcast. That's really the tip of the spear, I'll say. And I've been in online marketing for almost 20 years now. And what I learned before I got into real estate was having the influence with an audience was like priority number 1. It does not matter how good of a product or business you have. If you have no interested buyers or potential buyers, it doesn't matter.
Yeah.
So always focus on, hey, let me build the community first. Let me build the audience first. And so that's where I started with the podcast about, I think, 5 years ago now. And I chose podcast because that's what I enjoy the most personally.
Yep.
And also, it's much easier to produce than doing a bunch of like videos. You don't have to be quite as pretty and quite as editing for doing some high-end YouTube videos. But I started the podcast so I could 3 main goals. It was so I could go out there and, frankly, learn real estate investing and learn the local Denver scene, because I was not an expert at all in Denver or real estate investing. 2 was to network. I got to meet all sorts of great people, people like you and many other successful investors. But number 3, also, I needed the money. I needed to go out there and start generating audience. So I go out there and sell them something or provide a business value to them. So I've always focused on, hey, where's my passion at? What can I provide? And talking real estate, especially talking like Denver real estate, is just, I live here, I invest here, I love it. So I've been very focused on that. And then through all the networking, it's led to, all sorts of opportunities. And it's the main way I've been able to build Envision Advisors, which is a investor-friendly team really for like rental properties and house hacks, more of the long term. Tons of parallels to your team, just rather than fix and flip is, it's rentals, so your audience knows.
Exactly.
And then what spun off of there is just always like, hey, what are the opportunities? How do we go out there and buy the next rental? Hey, how do you go from 1 rental to 2 to 4, and just, continue to build that long-term wealth? I started gravitating towards what I call now essentially real estate financial planning, which was helping people understand, what do you do with your rental properties after you own them for a couple of years? So many people have, I'm using air quotes, won the game of like, hey, I bought a great property. I've learned how to do creative financing, go out there, do deals, understand cash on cash return, understand all this stuff. But fast forward a few years, well, what you did to buy those properties is not the same thing you need to do to optimize your portfolio and grow it. It's a different ball game and a totally different set of metrics. Usually like less focused on cash and creativity and more like, hey, I have this equity. What do I do with it? And so that has created a software program called Property Llama, which was after a couple of years of building very in-depth spreadsheets for helping people analyze their portfolios and properties. It got too cumbersome with spreadsheets. I was able to find a couple of great tech people and then turn that into an online software application so people could upload their portfolios and have a visual guide to it.
Nice.
And kind of get rid of spreadsheets.
Yeah, love it. Well, and that's a very systematic growth approach that I really like, because I think definitely some of our audience out there is, you and I sometimes call it the shiny object syndrome or theory, where something sounds sexy and it seems cool, and then we just quickly run in that direction. It's been very, very systematized, and I definitely applaud that from you. But I think to also put it in context, what I would love to hear and really have you share with the audience a little bit about, what were you doing before real estate investing? Because I think that your background is super interesting, and it also helps show that you don't have to be a real estate person to be damn good at real estate. Tell our audience what you were doing before, with your background, because I think it fits perfectly.
Oh, I love talking about that, because I leverage that skill set to really set a great growth pattern in real estate. So I'm 41 right now. So I think it's just about 20 or 21 years ago. I was, a sophomore in college. Went to Virginia Tech for 2 things: engineering and to join the Corps of Cadets. Well, after the first semester, I realized that both of those things were not for me. And I was like, wow, what am I going to do? I kind of went through the typical college kid. Well, what am I going to do with my life? All this. And I bounced around between majors and kind of hit a little bit of a funk. But then someone handed me a copy of Rich Dad, Poor Dad.
Nice.
And that was the first business self-development book I ever read, and it hit me with like a 2x4.
Yeah.
Obviously it's such a powerful conceptual book, but I was like, oh wow, there's this whole world of business. There's this whole world of investing. I just don't have to go out there and get a job and then go commute in Washington, D.C. traffic, which was, that was the area I grew up in. So that Rich Dad, Poor Dad book just lit a fire under me and just led me on a journey. And I actually read a book by Robert Allen. Do you remember Robert Allen, Derek?
I'm trying to place where I would have.
He was like one of the original real estate gurus. He was the no money down guy in the 80s and 90s.
Yeah, like Carlton Sheets and those kind of guys. Yeah.
Exactly. And so he had wrote a book called Multiple Streams of Income.
Nice.
And it was a great book. It was all just a giant lead funnel for different businesses he sold. But it got me really interested in real estate. And I realized, well, I don't have the money or time for that right now. What else can I do? But this was 2002, maybe 2003.
Okay.
This was still, post.com bubble of the internet, but still early days of internet. And I was like, wow, this internet thing, it's not going to go away.
Yeah.
I should probably figure this out. So I just started figuring that out and long story short, got involved in a great couple guys who were doing some internet marketing around a lot of like health supplements for a network marketing company. And so it was right place, right time. And I took advantage of learning from these, mentors and successful people. And I really focused on, at first, I'm a sales guy. I need people to talk to. How do I generate leads? And then I went from, figured out how to generate leads. Oh, well, now I can work these leads myself, or I could build a small team and distribute the leads and get better leverage that way and scale up that way. So I just took that mindset and kept scaling up as I would solve one problem. The next problem presents itself is what I've realized over the years. But early days, it was simple Google SEO and then simple Google pay-per-click was 5 cents a click for anything.
Oh my gosh.
I wish I could go back in time with a big credit card limit.
Yep.
And then early days of YouTube, and then early days of Facebook advertising, and then got into podcasting. So I had 2 podcast shows before I ever got into real estate, and they reached a couple hundred episodes in the podcast. Mm-hmm. And so I really learned, I would say, how to create effective content so I could talk to the other person behind the computer screen, connect with them, and then bring them down a funnel that would result in a phone call, like a very high quality phone call for, a very technical or specific product, like real estate. That's not something you buy just online.
Yep.
And so I scaled up tremendously that way through marketing, sales, and learning how to use technology to connect people. I am not a tech person, but I know enough to work with so I can use technology as a tool, which all tech is. It's a tool to go out there and, I think in my mind, connect people and provide better value. So as that business phased out for a variety of reasons, business partnership issue, some industry trend issues, I got bored, typical stuff. I phased out of that. And I spent a couple years trying to figure out what I want to do next, but I always kept coming back towards real estate. Because I knew from my early days of Rich Dad, Poor Dad, Robert Allen, that real estate is an incredible way to make money. I talked to so many people those 10 years who were very successful, and they all owned real estate for the most part.
Yep.
And I started getting to real estate. So I went out there and I did a fix and flip, made money, hated the experience.
Yep.
I learned that. I was like, wow, this is, it's doable, but this is a whole other business, and it's going to be very hard to scale. And I mean, you obviously have a couple of books on that, basically, Derek. So I learned, well, that's not my strength. I'm not going to pursue that because a lot of it's GC and walking and deal making, and my strength was finance and marketing.
Yep.
Did some wholesaling, got my butt kicked on that. I spent 6 months doing a apartment brokerage as a junior agent.
Okay.
Learned the ropes on there and realized, well, hey, why am I just cold calling all day? I can use this online marketing stuff. And then as I was always focusing on how can I learn real estate, what's the best opportunity for me, one of the keys that I look for is how can I go out there and find a mentor? Mm-hmm. Mentors have always been my shortcut to success in life. And so I always want to go find a mentor. But what I've learned is successful people, who want to be my mentors, they usually don't want to work with someone with no experience.
Right.
And just like, hey, let me buy a cup of coffee.
Yeah.
No, I'm a liability to that person because they're busy. They've got their family, their businesses, their rentals or whatever. Me saying, hey, I'll work for free. Tell me what to do. I am more of a liability than an asset.
Right.
But I realized, okay, how can I add value? Hey, this person's very successful. What can I do to make his life easier? What can I do to make his business better? And I'd always come forward thinking that way with my approach. So I took a lot of these skills. I learned in internet marketing and started looking for opportunities in real estate. As you know, real estate as a whole is about 20 years behind in tech, 20 years behind in marketing.
True.
It's a very slow-moving business. I was like, wow, I have a really great skill set here that the average person in real estate does not have. And I'm able to go out there and take this content marketing and building funnels and websites and podcasts and building an audience online. I can find some successful people around Denver and use that superpower to add benefit to them and also help me out as well.
Yeah, and I think what you've done a great job, and you brought up a good point, which is we run very parallel businesses with your focus on investment, real estate, and rental properties. Obviously, we're on the fix and flip side of things, and we both have experience doing one versus the other, but we both recognize what isn't our perfect sweet spot, and there's just been general referral business that we've been able to pass back and forth. There's been masterminding and brainstorming, and it's funny that I think so many people in our industry, it's so cutthroat and so competitive, and I was always on the outside looking in a little bit because I'm the only dude in our company that isn't a licensed broker. And so all of our salespeople are licensed brokers. But I think when I actually do a lot of our teaching, we tell people as an investor, lean into the real estate agent community. And it's going to take a lot of time and it's going to take finding the right people. But if you can make those relationships, it is very symbiotic. And I don't know why most people don't get it, but you guys have hit the nail on the head of knowing how do you add value. And that's key. That's number one.
Yeah. And I mean, I don't want to say it's common sense, but I feel like it is kind of been like, hey, I want this. How do I get this? Here it is. And, I was when I first got into business years ago, I was a big like Zig Ziglar, Jim Rohn, I would just listen to their CDs in my car, driving up and down, all over the place. And one of the quotes from Zig Ziglar, and this is not word for word, but it was basically, if you help enough people get what they want, you'll get what you want.
Yes.
And that just comes down to adding value. And I was like, wow, that makes sense. If I help my clients or prospective clients achieve their goals, I'll make money off there. Or if I go help this more successful person, and Charles Roberts, a local real estate investor, was my first mentor. I helped him, and that was an amazing springboard. But just go out there and how can I add value, which a lot of times is just solving a problem for someone or providing, plugging a hole they have in their life. Yeah. Well, if you solve that issue, wow, you earn their trust, you earn their business, and you make money, and it becomes an amazing flywheel that just starts building momentum.
Yeah, and if that person can bring you value, meaning either a deal or save you time or a good connection, then you're more inclined to do business with them. You're right. The tough thing is, and people want to be helpful, but you're right, the classic, let me buy you a cup of coffee or let me pick your brain, that to me, that's like nails on a chalkboard, because you're right. That's code for let me suck all of your time and energy, and I hope you give me a bunch of stuff, and there's a pretty good likelihood I'm not going to reciprocate. So go into it, and it's like, just think of how can we be problem solvers or how can we drive value for one another, and good things will happen. I just don't know why many people don't do that.
Let me take that one more, and maybe Seth here can have like a vampire sucking the energy noise when it comes out. That's my mental vision when people are like, wow, you're going to suck the time and suck the knowledge out of me. Like, that's no. But I'm going to go in the meeting. What bugs me is I still meet with people a day, and they're like, oh, well, tell me about yourself. I'm like, dude, go to Google, go to LinkedIn.
Yeah, LinkedIn.
Anyone out there nowadays, you can go spend half an hour on Google and LinkedIn and learn so much. And anytime I go meet with someone, especially like someone that I want to a person I look up to or really want to win their business or build a relationship with, I go on LinkedIn and Google for 30 minutes or an hour or listen to podcasts that have been on there, and you learn so much. If you don't do your homework before or to relate your due diligence before you meet with that person, I'm sorry, you're making a very stupid mistake. Yeah. And if you show up tell me the basics, I'm like, wow. Yeah. You did not do your prep work. Off the bat, you're not impressing me. Yeah. So if you meet someone, just go use the internet. You've got the most amazing resource in the world called Google.com.
I know. It's crazy. And it's funny. One of our other guests, is my business coach and strategist, Doug Slaybaugh, with the CPA coach. And he has a kind of a cool rule of thumb. And what he says is, if this is maybe just a classic interview example, if you're preparing for an interview, if the interview is 1 hour long, you should do 3 hours of preparation. And
that's his ratio?
That's his ratio, is a 3-to-1 ratio. And I thought, that's pretty interesting. I think that's pretty dang spot on. I think most people probably don't do that, to your point. But then I think even when somebody's coming to the table and they want to have a relationship, they want to work for your company or do whatever, we just brought on a real estate agent that was doing traditional real estate and they want to lean towards investment properties, which is obviously what we do. And he spent the time. God bless this guy. He listened to the entire first season of Raising the Flipping Bar because he lives in Wyoming on a 13-hour drive back and forth because that's how many episodes we had. He knew more about me than I felt like I knew about myself. And in the interview, I'm like, this guy, not only was he just good in general, but he blew me away with his level of preparation. And if there were two people standing side by side, like that other person didn't even have a shot. And now he's on our team. Like done decision, easy deal. I mean, it was phenomenal. So it's just like a little bit of time and energy. You don't need to listen to somebody for 13 hours, but I think that's a big takeaway for people, and they just need to do that.
No, I totally agree. And to be a broken record on that, if anyone out there is listening to this, like let that point stick. It is a very simple, it's a repeatable model, and it works. Just please do your prep work. Yeah. Whether you're going to business or a real estate deal, same thing if you're going to go out there and try to work with someone or want to build a mentor relationship. Go do your prep work.
Yeah. No, and just little things like that can help connect people. Even if, we think about our audience who are real estate agents and they're doing some investment real estate, it'd be like walking into an appointment with a person that you're trying to represent and sell their house and having no idea who they are, nothing about their kids. If you can get on their LinkedIn profile and know that, Cherry Creek beat, Thunder Ridge in football last night, their kid plays football, like you could say, hey, how about that game? You don't need to be at the damn game. It's just like the little due diligence, a little homework. It goes a long way. It doesn't have to be investing or mentorship. So,
absolutely.
Yeah, no, I think that was perfect.
Can I add one more thing on here?
Yeah, please do.
So, like the mentorship side as well. This has been a phrase that I've had in my mind for years. I always try to find mentors, but then create a vested mentor relation. This is like, I think, the next layer to it. This is what I did with Charles, who was a co-founder of Your Castle Real Estate, which is a very big investor brokerage here in Denver. And the vested mentors, not just something to like learn from you, but how can he have a vested interest in my success?
Right.
So from a very simplistic standpoint, I might be like, hey, as an agent, he would get, a referral fee from me, or he gets some type of like team lead override, or for flipping, hey, he gets part of the profit. But hey, as I go out there and have success, how can I get him interested in my success? Not just from like, hey, way to go, Chris Lopez, but hey, way to go, and we're making money.
Yeah.
Then I get his interest a lot more, because let's be real, like money talks. And the same thing I do, like, hey, what can I do in his business to add value, where I can help him hopefully do more deals or more wins to provide value, and also for me to potentially make a little bit of money off that as well. So I always look for those, like if I can find a mentor and have him like vested in my interest and essentially turn that mentor into, I say business partner very loosely.
Yeah, some degree.
It's a huge win because then the mentor really cares, and it sets up the relationship to like be results oriented.
No, I think that's super smart. And the other thing that we try to do, I want to jump into property llama here in a second, but we try to figure out when we meet with folks, we ask the number one question. To your point, it's not, how are you doing? Tell me about your business. It's, what's your biggest pain point right now? Because if that person, or me, let's say I'm sitting on the other side of the table and I can help solve that person's pain point or give them an idea, or you're right, hopefully lead to revenue, that person is going to go out of their way to work with me. And it just shows that you care and you've got the vested interest, because if you can solve their number one problem or just help or be top of mind, I think that's going to be invaluable.
I agree, and actually take that one step further. So I've done a ton of like split test marketing, all that, and one of the best questions that I still ask for the last like 20 years now is, what is your biggest obstacle?
Yeah, it's a good
which
one.
is the same thing. What's your biggest pain point? And you get such better feedback and response. And hey, what's your goal? Like the pain or the roadblocks are 10 times more in everyone's face. We all have our, oh my gosh, we all, have that ourselves.
Yeah.
But so much people can talk about that a lot more than a lot of times their goals. But from a marketing standpoint, that was like one of the best questions I've ever asked on marketing forums is, what's your biggest obstacle to achieving success or XYZ, flipping or buying a rental or whatever it is.
Yeah, that's definitely good. If we've got people out there listening on 1.5 or whatever, slow that shit down, back it up. You need to listen to that point. That is a fantastic, fantastic point. It's obstacles, it's pain points, and that will help lead to a ton of value. So thank you for that insight. I would love to maybe dive a little bit deeper into Property Llama. And the reason why is I'll even use myself as the perfect example. And I think a lot of people coming out of COVID probably also fit in this bucket. There's people that were intentional investors in buying rental properties, and there are people that became accidental landlords. So I know in our world of doing flips during COVID, we bought 3 condos, which was a major piece of our business model, went to put them on the market. Obviously, COVID didn't help of selling a condo with people being closed in communities. And then in Metro Denver, we had protests going on. So we owned 1 that was downtown, and then 2 that were in the Congress Park neighborhood, so downtown-ish. And then we had the unfortunate homeless explosion in population and disbursement out of City Park. And so I couldn't sell these houses, or these condos, I should say. So we kept them, we rented them, and we've slowly sold them off. My third one that I've kept for the longest is even being a guy in the business, I didn't maximize my equity. And I realized, okay, yeah, I'm making a little bit of money. For me, it was almost more of a tax strategy as a way to shelter some income and help avoid ordinary income tax. But then you look at the numbers, and had I been using the software or been more in tune to it, all these accidental landlords, they're leaving so much money on the table. And what do they do about it? So maybe use that as a context to tell us about Property Llama, and we can dive a little deeper, because I think our audience would get a ton out of that.
Oh, all right. Love it. So no matter what type of deal you buy, you eventually run into an equity problem with your property. And I'll use my very first property I bought. This was a little bit like just I was dumb and ignorance on fire and got probably the best deal I've ever had in my life. So this was 2010, 2011. So after the meltdown, bombed the market, just pure luck. I was self-employed. I couldn't get a loan, but bought a condo in Reno for $67,000. But I had a good network. I had a very wealthy retired individual give me a note on the property, because she was like, I can't get CDs or bonds paying anything right now, but I will give you a 0% down, 15-year note at 5% on the property. I was like, awesome.
Oh, nice.
So it was truly a 0% down until like my first mortgage payment 30 days later, my first HOA payment 30 days later to this condo. And I was like, wow, I got the best deal in the world. And then I lived there for a year or so. Then I moved out, converted to a rental. So like how a lot of people got started. And after a couple of years, like, wow, this is amazing. I got to start buying more rentals. And it kind of shifted as my previous businesses started phasing out and I wanted to get into real estate. So I really started coming back to that rental. How can I get more of these? How can I get more condos and more properties? Well, I started running into problems like, wow, well, even when this condo's paid off, because I was in the mindset, hey, I got the best deal in the world. I bought for so cheap. Why would I ever sell? Just pay it off and that's it.
Yeah.
Right. That's, I think, a lot of people's mindset in there. And, a couple years later, the thing rushed back up to $200,000 in change in value, but I'm making like $200 a month in cash flow.
Yes.
And so I started trying to figure out, well, okay, even if I pay this off, I'm going to be making, I want to say $8,000 or $9,000 a year in free cash flow after, expenses, no mortgage. Well, I mean, hey, I always take that check every year, but no one's retiring off $8,000 a year in income. It's just, you're not.
No.
$8,000 a month? Yes. $8,000 a year? No. And so I started saying, well, how the hell do I go out there and get more of these? But very fortunate, as I was learning from people and started doing a lot of podcasts, I learned a lot of these successful investors, they were focusing on the equity. Yeah. Because there's what you do when you buy. That's your investment, your cash, the creative deal, whether it's a 0% down or, a BRRRR strategy with, updating a property and then pulling most of your cash back out. Well, eventually you build equity. And that equity is your real estate piggy bank. Yep. But it's trapped in there. It's hard to get out. You can't just go withdraw it. You can't it's not like Fidelity, just go on there and transfer it from your stocks to your checking account. You have to go through a major refinance process where you have to sell the property to unlock it, like it's a big deal. But having that mental shift, which took me about 9 months to realize that was the power to build long-term wealth in real estate. It was not when you bought the deal, and there's tons of great education resource for that, but after you've owned the property for a while, what do you do with the equity in there? Yeah. Because a lot of times as properties start getting paid off or as they appreciate, like we see in the last 5 years, you start doing some debt pay down, those returns get really close to average historical stock market returns.
Yes.
If I'm making 10% off a rental and I can go put in that stock market that's 8 or 10%. Yeah, a little bit of a roller coaster ride on there, but I have zero headache, zero liability, zero $17,000 rehabs for my tenants destroying a property.
Yep.
I'm going to take the 8 to 10% return in the stock market over 10% in real estate. But that is where redeploying the equity comes into play. So that first condo, after I spent 9 months analyzing, building a bunch of spreadsheets, meeting a lot of people smarter than me, I sold that condo, but now I had $190,000 in cash that never came from me. That was from my good deal making and paying down debt and appreciation that I went and used as a down payment of fourplex. So I basically played a monopoly. I went from one greenhouse to a red hotel.
Nice.
With only a couple extra $1,000 in my pocket, and then my cash flow, I want to say 5 or 6x'd my future retirement cash flow, like net operating income, that like 8x'd. It was just insane. Yeah. And so I started realizing, hey, this is the key here, to like go out there and build wealth. But no one talked about it. I learned this concept sitting in the back of some local class while someone's giving a very successful real estate investor is giving a presentation. But then I realized there's two main things on there. There is the educational paradigm shift, which is like almost like reading a Rich Dad Poor Dad book, where it's just like, oh, I see the difference now. Like you have to understand, because it's a very hard thing for like the mind to wrap its head around. At least it was for me and many of my clients. The second is running that analysis is so much more complex than doing hey, if I buy this, here's a cash on cash return. And then, so I started building very in-depth spreadsheets. I started teaching people a lot of this education so they would understand it first, then let's do the numbers. But then I started having people saying, oh, I have 5 properties, I have 6 properties, I have 10 properties. Well, that gets very cumbersome with spreadsheets. Oh, let's do a portfolio review across 9 properties. Let's do, what if you refied? What if you sold? Now it's 27 spreadsheets. And I just got out of control. And so I realized there is a need out there to have essentially a financial planning tool for real estate investors to optimize or rebalance their portfolio. So just like a lot of people sit down with their financial advisor once a year to, do their retirement planning for stocks and bonds, real estate investors need that as well. Yeah. They need the education. They need someone to go out there and help them understand the opportunities, and then have an advisor, and then the software models it. Yeah. And the software gives people a very easy way to visualize it. And the beautiful thing here is, as we learn better ways to express data or show data or pull new metrics in, it's all updated at once versus, I have 300 spreadsheets and they're version 1.0 to version 1.9. It's a nightmare to go back and update, but everything lives in the software online. And it's really just become like my true passion, I'll say. Like I love it, and part of that's because no one else is talking about it. So it's always fun when you're kind of in the pioneering stage of helping to educate people. But like I'll stop rambling here in a minute. But like the discussions I've had with people and helping them like understand what they can do and how to optimize their portfolio. Like I sit down with people, and like a couple times a month, I get the privilege of helping someone realize that they are a freaking millionaire. I'm like,
yeah, that's exciting.
Did you know you have like 1.1 million equity? What? No, you are a real estate millionaire. What? You are a real estate millionaire. Really?
Yeah.
Yes. And it's just like, it's so much fun to do. And then you help people model things out, and then you help reduce their risk, you help solve pain points they have today, and then they make a couple portfolio moves, and their retirement goal goes from 25 years out to 11 years out. Yep. Like we're talking significant time savings on there.
No, I think that's huge. And I think where you guys are doing something really cool and unique is, you're right, the real estate financial planning. And that really is a hot button for me, because from my background in finance, it's a little bit of church and state, where personal, asset managers and wealth managers and financial advisors, they almost just look at, sometimes even had people put real estate in an alternative investment bucket. And if we're talking about some exotic, hospitality development in Mexico or something, like, there's some speculation there. But if you're just buying tried and true investment properties, deciding when to trade up, how to move that money, ideally getting more cash flow to then invest back into a portfolio, those are win-win opportunities. But you're right, nobody's talking about that. So I think that's the cool thing about what you guys do. And I don't know why, I guess I do know why, but I won't say it to our audience. But there should be a little bit of symbiotic relationship between wealth managers and advisors and the planning that you guys are doing. I don't know if you want to dive into why we think that's not happening, but what could make it a little easier for those two worlds to work together for somebody who truly got it. And I get it. Not everybody does understand it. But.
Yeah, I think a lot of it comes down to a couple things. Is like, generally speaking, a lot of real estate people don't say nice things about the stock market.
Yes.
A lot of stock market people don't say nice things about real estate. And I don't get, I'm like, they're both amazing asset classes to own.
Right.
I own stocks, I own bonds, I own real estate. Like, I'm a big believer and everyone owns it. But I think a lot of it comes down to it comes down to commission.
Yeah.
I mean, let's be real. Like, and this is always a balancing, like, hey, value versus, hey, we all have to make money and have a commission. A lot of traditional financial planners, they are commission driven, or they're under, assets under management. They're basically taking an annual fee for how much assets are under their management. And if, a person buys a rental property instead of a mutual fund, or if they try to sell them a REIT for goodness sake instead, they are losing on that commission. And I think from people I've talked to, and this is all behind the scenes stuff,
right.
Me putting the exits, it comes down to a lot of times they don't understand it. But I think the big driver is if people can't make money off it, or they fear losing commission on there, that stops people back. And I don't agree with that. Now, again, I'm a commission-based person, so I'm always balancing.
Sure.
But I've also talked to many people out of like, hey, don't actually buy this or don't sell this.
Yeah.
I've talked myself out of an easy commission. But I also believe in like, hey, if I do that, karma is going to pay me back 10x on that over the next 5 or 10 years. I have like trust from that client. But I think from like a net, if like, I think financial advisors, if they actually started incorporating more of the real estate understanding on there, or working with more people like you and me, yes, there might be like, they might lose 5 cents here and there, but overall they're going to win more business and have more money. I think both people do. Why? Because you're providing a better service to your client. And it comes down to me. Whoever provides the best service, the most value to the client, they win. And while there's, I think, as many financial planners as real estate agents there are out there.
Yeah, probably.
They're all kind of like offering the same thing. If you can distinguish yourself with, hey, I have a real estate financial planning arm, or I have a sister partner or company, whatever it is, that can actually help you understand your real estate portfolio, like there's huge synergy there. And from the long term, what happens a lot of times as real estate investors start entering the retirement phase, a lot end up liquidating, and then they want to take a lot of the money made from real estate, and that goes back to the stock market. It goes back to bonds. Like there's like from a high level, hey, I work with clients every single month. They're in their 60s or 70s. They're liquidating properties, and a lot there's like, hey, I'm gonna go park in bonds. I'm like, dude, you won at life. Congrats. Like, go enjoy your 10 grandkids, go retire Hawaii, and take your $2.9 million in equity and park it and make 5%. Like, that's amazing.
Yeah, no, I think that's really smart. Well, and I was looking at a piece of your content that I think plays perfectly into this, is that some people call it the silver tsunami, or it's the generational transfer of wealth that you talked about. Tell me a little bit about how you see this big generational transfer of wealth coming about, and how the folks in, Gen X and millennial generations can kind of benefit from that as it relates to real estate.
Oh, well, not just generation. Like, look at like, we were talking about this before, is like, it's known as a crystal ball.
Yeah. But
there's a lot of data and trends you can access. Again, go to google.com, and there's tons of trends of data you can access to kind of realize, hey, here's the big theme going on. And if you look at like the market, like the big theme the last 10 years has been huge appreciation in markets like Denver, Salt Lake, Austin, Idaho. Many markets out there have seen huge appreciation. Now, we've seen above historical appreciation rates. We've seen above historical rent rates. The law of averages always comes into play.
Yes.
There's a reason. And now what we're seeing right now is, while we've not seen, huge price drops in Denver, it's softened. It's gotten choppy. The next couple of years are going to be very, very low appreciation rates. So it might be 1% to 3%, maybe a little bit higher, maybe a little lower. Historically, it's 5 or 6. The last couple of years, it's been, double digit.
Yeah.
And so if you look at that trend right now, well, what does that mean? Well, it means we have huge equity across the board for most land or property owners, both primary residence owners and landlords. And the trend there is, hey, we know people are seeing tons of equity, and that equity is returning very low returns on the equity in the property. And for a lot of these people, how do we go out there and help them optimize their equity? And so right now in the marketplace, there's so much equity out there. I think it's like, on average, people have more than 50% equity in their homes.
Yeah.
And so whether you're an investor or you're an agent, you can go out there and teach people how to tap that equity and make it achieve their goals. Now, as an agent, obviously there's opportunities there, go out there and get some listings and maybe some 1031 buy sides, whatever it is, but go out there and help people, hey, let's take this equity, whether it's from a primary residence or from these 4 properties you own, and transition that. And so I think you have that market trend. And a lot of the people that own these rental properties, they are baby boomers.
Yep.
A lot of them have kids, high school, college now. They're starting to look at retirement. They're kind of looking at their next phase of life. And so they're sitting on millions of dollars of equity. The market conditions are saying, hey, keeping these properties long term, you're not going to make great returns next couple of years. And then if you can help align that market, what's going on with the market, and also align with like what's going on with the person's life, like, hey, let's actually go out there and simplify your life. Well, then there's a huge opportunity there from an agent standpoint and also for people who are investing as well. If you're going to go out there and get creative deal making, there are so many people sitting on tons of equity. Well, there's opportunities to go out there and find seller finance deals because if they have the property paid off, they're like, hey, I'll sell it over 5 years to minimize their capital gains exposure. Like, there's opportunity across so many boards on there or so many different ways on there. And I am hyper focused on, like, hey, if there's one trend out there, that is a trend, is huge equity build. How do you tap into that from an investor, as a professional, as giving advice to your clients? But that equity is the key in my mind, and that parlays very well with a lot of the generational wealth transfer starting to see happen.
Yeah, and I think that's a huge point because it gives the opportunity for people to make big chunks of money too. And I think you're right. I think it's a tough, slippery slope where a lot of people say in our world, go out and acquire a handful of rentals. Maybe it was your first inclination on that Reno condo, which is make a couple $100, buy a couple more. And I think David Green is even now kind of preaching this on the Bigger Pockets podcast, which is how many deals do you have to have, because things don't cash flow like they used to and probably won't for a while, to get $5,000, $8,000, $10,000 worth of a month in income versus, to your point, owning that condo for a handful of years and getting $190,000. How hard would you have to work to get that in gross income, let alone post-tax income? That's like 5 years worth of income for most people. Yeah. So I think you're right. It's maximizing that equity and then what's the best thing to do with it. And then, talking to smart people like yourselves or us or whomever, get the right trusted advisor to talk about that and parlay that into a significant lifestyle change. Because you're right. $8,000 doesn't change anybody's life, but $8,000 a month or $80,000 in a year in a deal, that sure as hell does.
Yeah. I mean, we've got people that are exiting out, they're selling a rental and they're walking with $500,000. Even if they pay capital gains on that,
yes.
All right, $100,000, $150 off the table, they still have $350 and change to go invest somewhere else. Or a lot of people are just parking that in treasury bills right now, or they're buying their retirement home, or they're doing alternative investments. Like, you unlock it, and the amount of money, like I said, the time it would take to save the amount of money is not realistic for most people.
Yeah.
But when they're saying, oh, you have $1 million in equity, how long would it take to save that money? Oh, like 20 years.
Yeah.
No, what's happening this over here, buddy?
Yeah, I think that's super smart. So maybe whether it was you or whether it was one of your clients, maybe tell us a little bit about I always like to do a best and a worst. Tell me a little bit about one of the best deals you've done, either for you or on behalf of your clients, unlocking that equity. And obviously you shared a great one in Reno. And then we want to talk about one of the worst ones that you mentioned on the family office building. So I always love to give people a balance of everybody talks about the great ones.
Let's start with the worst, because those are the fun.
Okay, I love it. Do the worst first.
And we're going to have a lot of fun dialogue about this, I think. So.
Okay. The worst.
About, I think it was 2 years ago, as I was in the process, like shifting some business around and just growth, we all have our successes. We all have our failures. That is, so I'll share a failure. Mm-hmm. And this is a big lesson learned is I was setting up some new businesses, getting some new business partners. We wanted to have a shared office space to put our company in. We're going to have like two companies in the same office space, like two, and, have a couple other like sister companies and vendors in there as well.
Yep.
And so we bought an office space in downtown Denver, and we're all partners in there. And so it's actually, really good numbers on there. But then what happened is, just as the businesses kind of started evolving, the partnership's just like, hey, this isn't the right fit here. It's no bad blood. It's just like, hey, you know what? Like, been dating for 6 months, and it's not working out, or I'm shifting this way, you're shifting this way, or it's just things aren't working out. Nothing bad. It's human nature. Yeah. Well, what happened there is I realized I was looking at the office building as a way to invest money for my real estate side, which is like my retirement income for me and my wife and our kids. Yeah. But also, how do I go out there and help the business? So I had two different internal goals of mine, which was business growth and real estate growth, trying to do it all in one asset. Right. And they both suffered because I bought this building for business. The business stuff didn't work out. And then all of a sudden, like, the office building from a pure number standpoint did not make nearly as much sense. So it started becoming like just, a headache and having some issues there. And, we had to take care of that. And so my big lesson there was I am going to have a very strong division between, hey, business growth and business needs versus real estate investment needs, because having my investment dollars try to serve both ended up being mediocre for both. Whereas for business, hey, I was better off just leasing office space. So, hey, the business changed. All right, let me just cut the lease.
Yeah.
Or let me just, okay, I got 2 years left on the lease. All right, it's empty. I'll pay sub, whatever, it's $2,000 a month. Very different than owning, multi-million-dollar office building. At the same time, then, in terms of like my real estate investing dollars, it was not the best to put it in that office deal because number one, I don't know office. And then that capital's locked up with partnerships. So it's hard to unlock and move towards other deals I want to do. And so I want to highlight that because that is probably the worst personal deal I've done.
Yeah.
And it's still actually, there's still some really good silver lining in there. But like, it was a very good like life lesson as an investor in business. And I look back and I'm like, it's obvious that was not the best decision at the time. But you get excited in the moment and like, oh, we're going to do this. We're going to do this. We're going to build all this. And just get that excitement. And then that excitement and kind of having the business goals and real estate goals, they start whitewashing the individual goals on there.
Yeah.
And so I want to talk about that because like there's a lot of parallels here with the Broadway Collective.
Yep.
And I'm really curious to kind of hear how you bridged that, because it seems like you've done it successfully. And as I've talked to people, I've heard more people having problems kind of making business and investments work. But I think you're actually pulling it off from what we've talked about.
Yeah, no, I appreciate that. I think we're getting there. We're in the infancy stage of our co-work space, the Broadway Collective. And I think where we're set up for maybe success, and we were trying to be as poignant as we could in making this decision, is we were in the same boat where our business was growing. We needed more space. What we're seeing is a big attraction from a staffing perspective. So actually, for the audience out there, Chris and I both shared some office space in a office building in Metro Denver, and we leased space and we were outgrowing it. And I think there's something to be said about someone coming into, just kind of an okay office and there's no big deal there. But for somebody coming into a beautiful space that's open, it's bright, it's collaborative, people can do a lot more business. I think it's helping us attract the right agents as we try to build our investment focused team on the fix and flip space. So I think that's the first box that got checked. The second one is our building right now is just under 7,000 square feet. We're only taking up about 2,000 square feet for the elevation companies. And so the rest of it purely is a rental play where the property pro formas as a fairly good just classic investment opportunity to bring in other businesses. We're hoping that they're in the real estate big umbrella, whether it's hard money lenders, mortgage brokers, bankers, stagers, interior designers, everybody, so that our perfect customer journey would be somebody walks in the door and we can lead them around and introduce them to a lot of people and help grow their business. And then they can grow with us, whether it's starting at a desk, moving up to a 6-person office. We have a lot of spaces. I think it's harder, to your point of like, you've got 1 or 2 and all your eggs in that basket versus we've got 24 offices and we take up 7.
Yeah.
I think that helps.
No, I agree, because we had basically like 2 office spaces, so two big tenants, and if one's gone, it's it's not good for NOI by any means. But that was one of the things as I started like dissecting that, talking to people like, hey, if you buy an office space, you have to buy it big enough to actually have it make sense. There's multiple tenants in that. I think it's what you're alluding to, and that might be one of the big differences on there. Like the office we were sharing at, a local investor we knew owned that building, had his business there, but they took up, I don't know, a 10th of the office space or a 12th of the office space, where even the numbers made sense with that. I think that was one of the mistakes I made, and I've learned now. Is that, hey, it's got to be big enough so even if like my business leaves or one of the businesses leave, the property still makes sense as an investment.
Yeah.
I'm curious, when you attacked that, how did you balance like the real estate dollar goals versus like the business goals? Or did you do a good job of like separating those?
I think we separated them, but you know me, I'm a numbers guy, and there was less empirical data to say, okay, if we build this space, we can bring in X number of people that will generate Y in revenue. I didn't go that deep. I just knew that if we wanted to, our goal is to have 10 people by the end of this year and hopefully 20 people by the end of next year, for a place for them to want to come, that we could host events, that we can have podcasts. I mean, the cool thing is we're sitting in our podcast studio recording together in the Broadway Collective that people can either use as a traditional conference room, or obviously we can record as a podcast together. So it was kind of making sure that all those boxes got checked. So yeah, I really didn't dive deep enough to say, okay, if we now have 20 people, we're going to make $100,000 in net profit because I've got agents producing a certain amount of deals. But we just knew that if this was the hub for real estate in Englewood or this part of Metro Denver, we could make that work. Versus I did look at it very, very just black and white of, here's my expenses, here's the number of spaces I got to lease, here's our, net operating income that this thing kicks off and it, hits a 7 or an 8 cap. The thing that I underestimated, because I had owned multifamily for years in the past as my investment income and kind of retirement type of plan, sold those off in 2022 was the only year where I didn't own a fair amount of rentals, and it really hammered my ordinary income, and we just paid a shitload in taxes.
Because no depreciation?
Because no depreciation. So we definitely leaned on our CFO and our CPA to say, okay, we got to get another hard asset to help offset. And so essentially the cool thing about that is this building is owned by an LLC that I have 5 companies that pay as renters to the Broadway Collective. And then we've got another 20 people on top of that will pay in. So that I had hard numbers on. I didn't really have, in full transparency to say, cool, we're going to bring in 10 people. We're going to make an extra $100,000. I'll now need to nerd out and measure that as we get down the road. But I definitely think it helps to have a landing spot, a place for people to be. We're in a transitionary phase, in my opinion, of where agents and brokers want to work, the team they want to be on, where they want to hang their license. And so if we can attract the right people, this building should actually just pay for itself, let alone, the investment income that it generates.
That's awesome. Well, congrats, man. I think it was 2 or 3 months ago when I think it was right when you kind of finished the place. You and I caught up for a cup of coffee and obviously want to see your space. And I was like, damn, you pulled it off, man. It looks great.
Thank you.
And as we talk, wow, I think you were able to bridge the business needs and the investment needs, which I think is a very hard needle to thread. So congrats.
Thank you. Well, and some of it's still gray area. I mean, we had an event last night. We're recording this in end of third quarter, early fourth quarter. We had a networking event and a meetup, and we had, I think, almost 40 people here last night. And so it also helped as a great place to be. So not that we didn't love being at a certain bar or restaurant or a certain, conference hall or whatever else, but it was just people walked in and they're like, okay, this place feels right. Business can be done here. Ideally, hopefully, maybe somebody wants to lease space here, but it's we want this place to be the hub of industry and serving our community. Like you said before, the education side of things, that was kind of still a passion, or is still a passion of mine. I think that's going to help. Again, that's great. I don't have data on that yet, but I'm gonna figure it out over time, and I think that'll be cool to look back at.
And last thing I can tell you is props to your wife Anne for the decor, the design, the color schemes. I think she deserves the congrats from what we talked about.
100% she does,
and that's a big part of that. It pops, which I don't think you and me that would do, but man, she aced it.
Thank you very much. Yeah, I'm very fortunate that that's a whole nother episode we could film at a different time of the husband and wife component to investing together and working together.
I don't know how you guys do that.
There's definitely days where I'm like, what the hell are we doing? But for the most part, it's amazing. And I'm very lucky that, she has a design eye and there's some really cool stuff that we've got going on here. So thank you. I will give her those props because she deserves them. I know your time is very valuable, so I want to kind of wind down here. I've got 2 or 3 things left to ask you before we get out of here. One of the things we always ask, of course, it's always crystal ball. You and I would be far more wealthy if you had the exact answer. But where do you see the Denver market going as we kind of wind down in fourth quarter, but really as we look at 2024? You mentioned minor appreciation. Where do you see the Denver investment real estate kind of market leaning in 2024?
So I think Denver Metro as a whole, the 5 counties around here, I think we'll see modest appreciation as a whole. There'll definitely be some neighborhoods that have some negative ones, some with bigger ones, but as a whole, I think we'll be between 2 to 4% will be my guess, so okay. Fairly modest.
Yep.
I think we'll see pretty modest rent increases as well because there's still demand. But the thing is, while rates have gone up, the inventory is so low on resales. So I think it's even though a lot of people aren't there buying properties.
Yeah.
We are still technically in the seller's market from the low inventory standpoint. And I'm selling a rental right now, and it does not feel like a seller's market. It took me 3 weeks and price reduction to get under contract. But technically, we're still in the seller's market. And so I think a very interesting thing going on where so many people don't want to list their properties because they're married to their 2.75% rate because they want to go out there and buy a bigger property at a higher rate. So we have very low inventory, so I think it's keeping prices very stable and still growing some. Mm-hmm. There's a bunch of like, I think in the next like year or two, there'll be a glut of some Class A multifamilies coming online. We've all seen the cranes up and down Denver.
Yes.
The last that I saw was about 75,000 units coming online. I don't think that's going to affect, I say, mom and pop landlords like us and probably people listening here, because I don't own Class A downtown.
Yeah,
I don't
me
think
either.
you do. I've never had any clients own Class A downtown. Nope. So I think we'll see, I think there'll be a pretty big shift in the Class A rental market down there. Mm-hmm. If you look at the data right now, it's like prices on residential, even single family homes, like I said, they're flat up some. Prices on residential multifamily, duplexes, triplexes, fourplexes, they're choppy, down a little bit, but nothing significant. Where the pain is, it is commercial, especially like commercial multifamily. I actually just did a webinar the day about and pulled up the latest data. Like their prices are almost back to like 2019 prices.
Wow.
On average, like, per unit.
Yeah.
And so that is where the pain is. So I don't think there's going to be huge opportunities on a grand scale like the 2008 meltdown that we had.
Yeah.
I think that pain is coming in the commercial space, which for a lot of, mom and pop investors, you can't go out there and take down a 30 unit or 270 unit apartment building on your own, but you can as like a, limited partner in a syndication or fund like that.
Yeah.
But I think that's where the big opportunity is. And so, like, for me, what I'm doing personally is, like, I'm not buying active rentals anymore. I'm shifting into more, like, buying into, like, as an LP into a multifamily deal.
Yep.
And I'm selling a lot of my rentals right now. I'm selling one now, selling two more in the spring to just move the equity from this asset class in real estate to this, because I want to chase yield. I want to chase growth. And we've had so much growth in Denver real estate the last couple of years. It's almost like we did a cash advance.
Yeah.
We did a cash advance on appreciation. We did a cash advance on rental rates. Those are going to be historically lower. Again, law of averages are coming back out. But I think prices will be stable, rents will be fairly stable, and they'll both be like modestly up.
Yeah, no, I think that's spot on. I would agree with everything you just said. And I think that people being kind of cash flush and being nimble to take advantage of those opportunities coming up next year, I think that's going to be huge. One other thing I want to learn about you is what do you do? You have a lot of businesses. So a thing that we always say is what do people do to work on their business, meaning strategy and strategic focus versus in their business, which is I wake up, I got 6 meetings, I'm running around, I'm doing the day-to-day. It could be either something maybe across all of your businesses, or maybe it's more attuned to Property Llama. What are you doing to work on your business versus day-to-day in your business?
Oh man, that's a loaded question. And some weeks it's all just your emails, meetings, and putting fires out all day, and then that kind of ebbs and flows. The two biggest things that I really focus on the last year and a half as I scale up as an entrepreneur and a better leader is really finding the right who's. Mm-hmm. I know there's the popular Dan Sullivan book, The Who, Not the How.
Yeah, great book.
Which, you can, the title says it all, essentially. You can either figure out how to do something or find the who that knows how to do it. Yeah. Like Seth here, he knows how to do the podcast production for you.
Yep.
So you have the right who. And so I've been very focused on finding the couple like right who's to kind of be my leadership team, where I really spend all my time with them and then they work with their teams. So learning how to work with them and manage them has been a big part of really making sure that, hey, we have clarity in the common goals, the vision, and the projects we're working on. The other thing I do, and I'm good about this majority of the time, is I will carve out a couple mornings a week, a couple weekday mornings, and probably like 2 Saturdays a month.
Yeah.
I'm usually in there from like 7 to 10 a.m., sometimes a little earlier.
Yep. Before
emails, before meetings, before phone calls, and it's my deep work block. And I will not check anything, because once I check an email, man, my mind is off track, and then I'm, oh wow, I've answered emails for the last 2 hours, really got nothing done. So I do deep work to be very focused on a couple 1 or 2 projects that I need to marinate on, or more like do strategy. And so I've learned to go out and block the time to do that. And I'll come back and actually spend time later on, cool, I put this plan together, all this. And I come back and I learn to challenge myself, being around a lot of very successful people. And I say, okay, how can I scrap this plan? It's been a very hard exercise, but very beneficial. All right, did all this. Hey, I got this. I got here. All right, I'm going to take a step back and let me tear apart my own plan and be like, wow, Lopez, you're thinking small. And I will I'd say that to myself, not in a bad way, but that kind of gets me motivated. I'm like, okay, how can I go bigger, faster? Because you've been around this, Derek, you're around people and they're like, oh, yeah, hey, doing a 300-unit apartment building is no different than doing a 30-unit or 3 units, just more zeros. And I'm like, I hear people say that, but it took me a couple years of being around it to really start like understanding it. So I try to take that same mindset and apply it to myself and just go bigger, go faster, and all the projects I do. But I think having that deep work time planned out and blocked out and having like, hey, I got a couple of these projects and you marinate on, or just sometimes having like really no agendas, having be creativity on there. I find that so beneficial for the business and very beneficial for like me as an entrepreneur.
Yeah, no, I think that's smart. I think our audience really needs to take that time block and take that as a key takeaway. That's going to be really important. Okay. So last thing we've covered so much ground. It's been so awesome to have you, like you said, in the passenger seat and I get to drive versus vice versa. Is there anything else that you want to leave the audience with as we wrap up here? Anything else, last parting words, comments that you can think about that would benefit the audience?
Just from a high level, because I know we have a lot of investors and also real estate professionals listening to this, the market has changed and it's not going to come back the way it was. So I know everyone's, as a whole, business is down, volume is down, real estate industry is in a recession right now with how many people have been laid off. But take this time to go out there and reinvent your business. I'm kind of making some of my businesses like 2.0 right now. Like, hey, I got to do the 2.0, which is adapting the new market. So I would encourage everyone to go out there, take the time, take a step back and say, hey, we got a lull in the market. We got a pause in the market. How can I go out there, adapt in this market, and how can I go out there and be better? The second thing is, I know a lot of people are leaving the industry. A lot of people are just sitting around bitching and moaning about whatever's going on. Cool, do that. I have my pity parties too. But right now, this is a time to gain market share.
Yes.
Yes, every deal I do now is 4 times harder than it was 2 years ago. And so everything is just harder right now. But we're gaining market share. And in a year or 2 years or 3 years, holy smokes, it's going to pay dividends in my mind, because everyone else out there, they're leaving or they're having a pity party. I'm out there working, pivoting, and adding value to people. And eventually, as things pick back up again, I'll be poised like, wow, you're a professional. You stay in the game. You kept working. You kept finding opportunities. I'm going to be with you, Chris.
Awesome.
So I'm very focused on that right now.
No, those are 2 great takeaways. Where can people find out more about you? How can they follow you? How can they engage with you? Give our audience the place to find you. Obviously, we'll have show notes, but I want to hear from you.
The 2 best things is, first off, I'm a marketer, so you should be able to Google Chris Lopez Denver, and I will pop up like crazy. Yep. I highly recommend the Denver Real Estate Investing Podcast. I love it. We're on episode like 480 now.
Nice.
The other thing you'll do is, if you want to actually do your portfolio analysis, go to propertyllama.com. So propertyllama.com, go create a free account, upload your properties. It'll give you a lot of analysis on there. And we are still rolling that out. And if you put your property in there, I'm happy to sit down and have either myself or I got a couple of great team members. Let's sit down and do our portfolio analysis with you. We will help you figure out opportunities you have, but most importantly, we will add value to your investing business.
Nice. Chris Lopez, thank you for being on Raising the Flipping Bar, my friend, and we'll catch you on the flip side.
Awesome. Thanks, Derek.
Thanks.